What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. An article published by state-run China Reports Network suggesting that party members be required to have 3 children caused a stir online this week and has since been taken down. The article is an opinion piece and does not necessarily reflect official policy, not yet at least. The article, which though is now deleted, was collected by Google, expressed, quote, "Every party member and cadre should clearly understand the importance and urgency of China's population development, improve their political position, enhance their awareness of national conditions and national policies, and take actions to consciously implement the 3-child policy." It went on to express, quote, "The state implements the 3-child policy according to law, which is needed for the growth of family popularity and the development of the national population. No party official should, for subjective and objective reasons of one kind or another, refrain from marriage, childbearing, or having only 1 or 2 children. The implementation of the 3-child policy is the responsibility of every party member and cadre to undertake national population development." End quote. There are currently 95 million party members in the People's Republic of China. Now, while we're here on this theme, let's move on to more bad news this week regarding China's demographic crisis. This week, in a series of interviews, renowned demographics expert and executive chairman of the online travel platform Trip.com, James Liang, expressed that according to China's own official data published by local Chinese authorities, China's population is expected to peak this year and then begin a decades-long decline. It could be generations before China sees its population grow again. In one interview with the Hong Kong-based South China Morning Post, Liang said that the number of births across the country fell 20% to about 10 million in 2021, while the number of deaths could be more than 10 million this year, meaning that, quote, "the size of China's population has peaked much earlier than previously expected," end quote. Data published this week also shows that new marriage licenses fell to a 13-year low of 5.9 million in the first 3 quarters of 2021. A study by Southwest Jiao Tong University in 5 provinces found that the average value for rural couples of engagement gifts has surged over the past 7 years and is now more than 6 times the annual income for rural households in those regions. We already know from previous episodes now that in the People's Republic of China, mainland, women gave birth to just 12 million babies last year, an 18% decline year on year, a near 6-decade low. That means that the national birth rate dropped to a record low of 8.52 births for every 1,000 people. And that is of course based on official data. There are some experts who believe the data has been massaged and that the situation is much more dire than is currently reported. Okay, next up, EU-China, trade and politics. China's attempts to make an example of Lithuania for its recent moves to form closer ties with Taiwan through trade and economic punishment may be damaging its broader relationship with the European Union, a trade bloc representing $15 trillion of GDP. EU Vice President Josep Borrell and Executive Vice President Dombrovskis expressed in a joint statement this week that the EU has been informed that Lithuanian shipments are not being cleared through the Chinese customs and that the import applications from Lithuania are being rejected, and that unity and solidarity with the EU remain key to upholding the interests and values in EU relations with all countries. Quote, "The EU is ready to stand up against all types of political pressure and coercive measures applied against any member state. The development of China's bilateral relations with individual EU member states has an impact on overall EU-China relations." End quote. Then on Thursday, UK-based Reuters reported that according to a quote, senior government official, end quote, China has told multinationals to sever ties with Lithuania or face being shut out of the Chinese market. This week, the EU raised Lithuania's claim that China has applied, quote-unquote, unannounced sanctions on its products with the Director General of the World Trade Organization, who says they discussed the matter with the PRC Premier Li Keqiang. On this theme, this week too, the European Commission proposed a new tool to counter the use of economic coercion by third countries. In an official statement, the European Commission expressed that the legal instrument is, quote, in response to the EU and its member states becoming the target of deliberate economic pressure in recent years. It strengthens the EU's toolbox and will allow the EU to better defend itself on the global stage. End quote. The anti-coercion instrument lays out a range of punitive actions the EU can take when it is satisfied that coercion is taking place, including tariffs, suspension of market access through the use of quotas or trading licenses, and restricted access to public procurement programs and investment markets. State media in China this week is not too happy about these developments. Yesterday, the Global Times expressed, quote, the EU's commitment to the One China principle should not just be words, but should be put into practice. Lithuania's actions have violated the One China principle, so the right action for the EU is to stop Lithuania. End quote. This suggests that some Chinese policymakers don't understand that for many Western countries, the One China principle is seen as a pragmatic policy that must be stomached to maintain political and economic relations rather than a core value. The article concluded that by supporting Lithuania, quote, the EU is playing with fire. End quote. Okay, next up, this is quite an interesting development here. By the way, guys, if you're enjoying the episode, don't forget to hit the like button. It's the only way that a small channel like this can be shown to new people. And if you're watching this for the first time and you're getting some value from it, maybe consider subscribing. You'll have the most up-to-date analysis on China when I release it each day. Okay, let's jump back in. A week ago, Beijing hosted its so-called National Conference on Work related to religious affairs. According to state-run Xinhua media, General Secretary Xi Jinping expressed in his speech at the event that it is imperative to further uphold the principle that religions in China must be, quote, Chinese in orientation, end quote. The General Secretary emphasized the training of party and government officials who are, quote, adept at the Marxist view on religion, familiar with religious affairs, and competent to engage in work related to religious believers, end quote, and that religious figures must be, quote, politically reliable and have noble characters, end quote. And last up, Evergrande and the Chinese housing crisis. It is now confirmed that Evergrande, which has liabilities exceeding $300 billion, missed a Monday deadline to repay bond coupons totaling $82.5 million. US-based ratings agency Fitch stated yesterday that Evergrande has not responded to a request for confirmation on the coupon payments, and it is therefore assumed they have not made it. As of the filming of this, neither the company nor the Chinese government has confirmed that Evergrande has defaulted on its debts. As we discussed in previous videos, the fate of Evergrande and its creditors is now in the hands of a government working group. Local government officials dominate the risk management committee unveiled by the developer this week to guide its overhaul. On Thursday, the governor of the People's Bank of China, China's central bank, in an effort to calm markets, expressed, quote, the risk caused by a few real estate firms in the short run will not undermine the market for the medium and the long term, end quote. While the government-led management of Evergrande likely means that a messy collapse is unlikely, it does mean that international creditors owed dozens of billions of dollars will likely be at the back of the line when it comes to who gets their money back. This is going to make financing and funding for many companies overseas very difficult. We also don't know whether there are going to be more developers that may collapse too, especially if the restrictions, the regulatory restrictions that have been placed on developers are not scaled back, if financing becomes very expensive, and if more pressure is put on them to deleverage. If a dozen or so property developers begin to collapse and the government has to step in there, we may be talking about a much bigger beast in terms of the likelihood of whether there is a systemic financial collapse risk. But at the moment, with just Evergrande under the government control, it's looking like collapse is less likely. But we need to continue to keep an eye on, one, other developers in the market, and two, whether the government is going to either, one, turn to other parts of the economy to boost up, or two, take some of the deleveraging pressure off the Chinese property development sector. That's what we're going to be following over the next few weeks and probably the next few months. Now, the other developer that we've been following is, of course, Kasisa Group. Kaisa also defaulted on debt due this week. According to the US-based Wall Street Journal, on Thursday, Fitch downgraded Kaisa's credit rating to, quote, restricted default, end quote, a level assigned to borrowers who default on debt payments but haven't yet made a bankruptcy filing or entered into other formal winding up procedures. Evergrande has $19 billion of US dollar bonds outstanding, while Kaisa owes $11.6 billion US dollars. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.